The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 3rd magnificent Monday edition of today's Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having an extraordinary day. Let's make sure we do everything we can to have a wonderful, magical Monday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I, we can make that one little 2x4 ship, it means we can find the gift, the absolute gift, in every set of circumstance that life is going to throw at us. That's what it's all about. We're going to go take a look at the circumstances that the bulls and the bears are throwing at you and I right now as we navigate these markets. I'm absolutely grateful for your presence here today, and I'm here to serve you. So feel free to pick up that phone, dial on it at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. This is Magical Monday. Of course, it's none other than Tiger Finance News Network. Welcome to the Hotel California. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down 179 points, trading out at 17,511. S&P off 15 points, trading at 2,089. NASDAQ Composite down 40. She's trading at 5,088. Russell off about 13 points at 1225. The DAX finished up 134 points. The FTSE was flat, down 7. Gold is trading off $4. Silver down 23 cents. Light sweet crude back $1.88. She's trading at 45 1/4. Lead the charge. The upside here, you've got Allegiant Travel. That's up about $7 and change. Boston Beer. Sam Adams, have one for me. That's up about 3.5%, up $7 as well. Lexicon Pharmaceuticals up $5. Frontier Communications up $4. Google up $4. To the upside, Clorox. They're cleaning house today. They're up about $3. To the downside, Priceline, big leader dollar-wise, off $18. That's about 1.5%. Intuitive Surgical. Brain salad surgery, Intuitive Surgical off about $11, down 2%. Columbia Sportswear down 11%, off about $8 out there. LinkedIn off $7. Trading below support, as I recall, right around the 205 area. I probably trade right down into its most recent swing point. Remind me, we'll go take a look at that. Ralph Lauren off $6. But what you want to know, what I want to know, we're going to go take a look at what's going on inside the markets. Short-term, intermediate term, long-term. We are into a new month. We're into the month of August, so let's go see what's going on here right now let's go back to this chart here. Let's take a look at really a follow-up to the chart that we've been following, which is the 120-minute, the 2-hour chart inside of the ES Mini. Now, inside the ES Mini out here, it is breaking through levels of support. Now, those levels of support that we're looking at on my screen out here, first right now we can see the resistance. The resistance being that little diagonal trend line coming off of this swing point here from about between noon and 2 p.m. on Friday out there. And we can see how that level's been touched. We're looking at the body of the candle. Body of the candle, truly the essence of price out here. Now, the blue horizontal line going across my screen, those are our TAS market profiles. Those are the daily boxes. And right now, what is being tested and what it's being sliced right through is the daily bottom of that box out there, 2,085.50. That was a significant, or is a significant level of support. This is a daily profile on a 120-minute time frame chart that we're looking at. So what's really key with regard to today, the close of today, 5:15 today, is whether or not the ES Mini is trading above 2,085.50. If it's not, where price is likely headed to is back to these swing points back here that began on July 27th. Now, at the bottom of those swing point area happens to be the weekly market profile. And that is a significant level, or should be a significant level of support down at the green level. That's 2060.25 is what we'll call it. Point of control where the most congestion is right at that little dotted line. Price-wise, that gets you down to 2,074. So those are some levels to be watching. Now, what we also know, let me go ahead and pull up some other tools as we take a look at this chart here. Let's go ahead and turn those levels off. Well, I'll leave those on for the moment. Let's take a look at our primary trading range boundary lines. These are other levels of horizontal support and or resistance. So right down at about the 2,077 mark out here, which is near that point of control on the weekly basis, which is 2,075 basically. That really should be a decent level of support on any continued push down. If those things break loose, I would have to say price goes down and it tests out that 2060 level. What else? What else do we know here? Well, what we also know is if we take a look at some Fibonacci retracements. Let's turn off those horizontal lines. Just to take a look at some Fibonacci numbers out here as we take a look at those retracements. That's really going from the lows back here on July 27th to the high put in, little doji candle style candle back here on July 31st. And what you'll see is prices sliced right through with a wide ranging bar on this 2-hour chart, right through that 0.382 retracement level. You hit this 0.618 area. Price point, by the way, is, let me give that to you, 2,076, and we'll call it 0.75 out there. You know, you hit that area with the wide-ranging bar. The message actually to you and I is that we'll see lower price. We'll see the 0.786 retracement, which is priced out at 2,068, and or will likely go down to the lows out there. So this is a wide-ranging bar right now. Now, this 2-hour session does not complete until 2 p.m., so it's got 45 minutes. Remind me before the show is over. Just, knock on my door out here. Remind me. We'll go back and take a look at it and see what its message is as this bar is closing. So that's what's going on from an intraday standpoint. We know that rising price channel that was in place, that no longer is in place out here. We're not even going to worry about it. We're going to go ahead and delete that. Now, what we can also take a look at here, we can look at it on a couple of different charts. Let me put this one up on my screen. Let's also look at the 2-hour time frame chart for the NASDAQ out here. Now, in the case of the NASDAQ, which was the weaker of the 5, let's say, indices that we followed, New York Stock Exchange, S&P, Russell 2000, Dow, and NASDAQ Composite out here, or the NDX. In any event, if we take a look at this, what we do know is price had finally broken out. This was after, I believe, the release of the Fed minutes out there back on, what was that, Wednesday, I believe, of last week out here. This, again, it's a 2-hour chart. We saw that nice, big, wide-ranging bar as price pushed up right into that descending price channel. Broke through it, but it didn't break through it exactly with any kind of conviction, right? Just simply made a sideways move out here for the rest of the time period, meaning the rest basically of Thursday and Friday of last week. Now what we can see is prices coming back and it's testing the top of that descending price channel. When you break a level of resistance, which in this case here, the NASDAQ did, you actually like to see it come back and test that level. In this case, because it's descending, it means it would be testing it from a lower price level out here. Again, this chart also is going to complete at 2 p.m. today. Any price move inside it right now, you can see you're at basically the low of the range for the day out here. You're moving into it with a wide-ranging bar. But any close inside, that says, hey, it was absolutely a false breakout to the upside out there. And that is the message of the NASDAQ on its 2-hour chart out there. So that's what's going on across the board, in my opinion, with regard to the markets and levels of support. And we'll come back and we'll check in on those during the show out here. Let's go take a look and let's go step up now to a daily chart, get a feel for what's going on there. And we'll do that by taking a look at the summation index for our 3 indices that we track out here. New York Stock Exchange on the left. Dead center is the NASDAQ Composite, and off to the right, just outside, is the Dow Jones. As we take a look at it, the Dow was the first one above zero. Once it got above zero, and I'm referring to that price oscillator out there, that's really your tug of war between the bulls and the bears out here. Once you got above zero, which was back on the July 29th day, price just really moved sideways. Now that you're back below That says that the buyers have lost control. Of course, you didn't need me to tell you that. All you had to do was just take a look at the markets, right? Well, yes and no, because actually in the New York Stock Exchange, the buyers have not lost control. Remember, last week as the market was moving higher, I said it was the New York Stock Exchange, the wider swath of the market that was stronger than everything else. And that's got to make you and I say, something to think about out here. Because most people were blaming the move higher on just a handful of stocks. I can't tell you the number of times that I heard that. And I kept saying to myself, well, what the heck are you folks looking at out here? Are you not looking at the New York Stock Exchange? Are you not taking a look at the net advancing issues that were going on there? At this stage, we'll go back. We'll take a look at the New York Stock Exchange. But you can see here inside of the Dow, that price is trading right back into its swing point from just back on July 27. The top of that swing point, by the way, I've just got to turn on the data window, then I can actually give it to you. The top of that swing point is 17,562, and you're trading inside it. Look, if the Dow closes inside that level, that says you're going to go test the bottom. Could break out the bottom. Could go ahead and form an A to B equals CD to the downside. Lots of coulds out there, and looks like it's going to go ahead and test that hammer candle. Both you and I, we took a look at the trading days inside of the Dow. We've got two hammer candles as well inside of the Dow. Well, this is the Dow that we're looking at. We're not looking at the futures. Those are the trading day of July 6th and July 7th. So those levels are going to be under attack again. 17,465.68 to be exact. Now, if tomorrow on Turnaround Tuesday, because this is just simply magical and marvelous Monday. So if tomorrow on Turnaround Tuesday, the price oscillator gets back above zero, it's really just a complex maneuver here, which says that the buyers still have control. So the key is not as much today, although today's always a key session. The key will be what happens on Turnaround Tuesday, assuming that the markets are going to finish poorly out here. If we go take a look at the NASDAQ composite, it never did get above zero when we take a look at that price oscillator out there. It tried, it attempted, and for a while on Friday, we saw, for more than a while on Friday, we saw the price oscillator above zero. But coming into the end of the session, into the close out there, it was the hot potato and just simply did not get enough net advancing issues in order to close above zero. Therefore, inside the NASDAQ composite, it has been these sellers that have been in control. We saw that nice little bounce off that oversold condition that was formed back on July 27. But even though we saw 0.618 retracement, that's what we had from the top to the bottom. If you're wondering what that is, it's a wonderful way to be able to measure what's going on inside the market. Just like you measure things, you know, if you're making some recipe tonight, you're going to do a cup of this, a tablespoon of that, a teaspoon of this. If you're going to go measure how many miles it takes you to get from work to your home or wherever it is you might be going, you'll measure it by miles. Inside of the market, you and I just use those Fibonacci rulers, 0.382, 0.618, and 0.786. In this case here, a 0.618 retracement was made off of the low. Sometimes that can be a U-turn. As we speak right now, it's absolutely a U-turn out here. This is Steve Rhodes with TFNN. We get back. Let's go take a look at the VIX index. Let's go take a look at the New York Stock Exchange. Let's go look at some of the long-term charts as well. Of course, you can always give us a call, 877-927-6648. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 181 right now. S&P is down 15. Let's go finish off the summation index. Take a look at what's going on. I've got the New York Stock Exchange up on my screen right now. If you look in the very upper right-hand corner in the data box, what you're going to notice is you're going to see it's in blue. It says OSC, the price oscillator. And you'll see the reading right now is 4.12. That means that it is still above the green line. And the point that I want to make here, this is really just simply how strong the New York Stock Exchanges. I saw a posting inside our Tiger's Den. If you haven't had a chance to check out the Tiger's Den, come on over to the homepage of TFNN.com. You know, the whole key to being able to always up your game is to make sure that you are always with a peer group that can assist you in doing that, whether it's sports, whether it's trading, whatever it is out here. We've got a great one. So come on over and test that out. And I noticed inside the Tiger's Den says a nice big sell wave inside of Apple. Well, Apple, with regard to its weighting inside of the NDX 100, the Qs, the XLK out there. In fact, we'll go take a look at the equal weighted versus just the weighted ETF structure out there and see if there's any message that we can glean. But basically, I want to come back here to the New York Stock Exchange. Now, it's hovering towards that zero line, and just like we took a look at inside the Dow Composite, remember, never made it above that level out there. If we see it close today below, and then tomorrow on turnaround Tuesday, a move back up above that level, it's actually still the bulls, the buyers, that would have control of the market. Just would be what would be considered a complex structure out here. So at this stage here, the wider swath of the market is not giving the old sell signal to you and I. And it's made, now what it did do, made a nice little 0.786 retracement from high to low, meaning from the trading sessions out here from July 16th down to the July 27th level. That was on Friday. Got very close to it. 10,947 would have been the exact hit. The actual number was 10,933. Not too shabby out there inside the NYSE. So it'll be important to see how this closes the day as well. If we take a look at what's going on inside the VIX index right now, trading at 1345. Looks like it's headed for that 1402 area to test that 50-day exponential moving average line. That's the key number that you want to be paying attention to. It is the best use of the VIX is understanding where it is in relation to its 50-day exponential moving average. If we take a look at the percentage of change, the one-day rate of change right now, 10.97%. Here's the deal. Here's the drill. If you're a short-term trader and the VIX trades, right about this 1345, probably 1340, I would assume is the number out here. Hey, the higher, the worse for you if you're short the market. Go ahead and cover that coming into the close. Expect at least a bounce, if not a bottom, especially as we come in a turnaround Tuesday. Or don't do that, but at least put in a stop out there, because the likelihood of seeing a turnaround, if the market finishes like this, specifically the VIX, is 90% plus out there, especially as we come into a Tuesday. And that's what's going on with regard to that index, that indicator out here. Here's the equal weighted ETF versus the weighted ETF structure for the NDX 100. The QQQs down at the bottom of my screen in green. In the blue section, in the blue corner, what we've got is the weighted, the QQEW, the First Trust NDX 100 equal weighted ETF. Now, what we can see here is we see the first, let me do this. Let me get rid of the downtrend channel line. Let's just go back to the normal indication out here. So as I turn this off, there we go. You can see that when the equal weighted ETF is moving in the other direction, either making higher lows as it was, we'll just go right back here to the time period of April in 2015. It was making higher lows as the weighted version, its brethren out there, the one that everybody really focuses on and takes a look at, was making a horizontal low, a slightly lower low. There was divergence there. And it is the equal weight that always points the way. Same thing out here as we saw during the rise inside the QQQ series with regard to Google. It was primarily Google that had moved the Qs up above their most recent highs out there. And you can see that the equal weighted never participated in there. Now what we've got out here, we've got this little downtrend channel inside the equal weight. And if, in fact, price is able to get below its most recent swing point from July 27th, what you should anticipate is price moving down to the bottom of that channel line. But that is looking at the QQEW series. As we take a look at where we're at today, there is no divergence out here. There just simply is resistance, the top of that downtrend channel. We've got the same thing really going on inside of the S&P as we take a look at the SPYs ETF in comparison to the equal weight, the RSP, the Guggenheim. I like that name, Guggenheim S&P equal weight. We can also see that it's in a descending price channel. Now, these descending price channels are important for you and I to look at, because if price ever breaks out to the upside in them, that'll also have a meaning. This is Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. I was tinkering around this chart here. If you listen to us on the radio, your mobile device at TFNN.mobi, don't forget, you can always catch the archive of this show on Channel 9. Of course, you can just tune into us live by coming over to the homepage at TFNN.com. You can watch us on Tiger TV. And I was tinkering around with some data from the investor sentiment survey out here, the AAII, which measures the percentage of individual investors who are bullish, bearish, or neutral, and it's with regard to their view over the course of the next 6 months. And they're polled weekly, and you've got to become a member. You could actually become a member if you'd like, and go ahead and give your vote on that, and 1 vote per member out here. But what's interesting is I'm trying to identify, is there something that you and I can utilize through this survey, through this data? It goes back to 1987. Is there something that you and I can take a look at this to see whether they get things right, whether they get things wrong? Is there some type of a contrarian indicator that you can use? And what you're looking at the very bottom of my screen out here is the bullish spread, the spread between. So I've eliminated the neutral position, and I've just simply taken a look at what the spread is between the bulls and the bears out there. The center portion, or the next level up, panel number 2, is really what the sentiment is with regard to the bulls out there. Now, I did have what the sentiment of the bears was, but quite frankly, the sentiment of the bears provided you and I with no information that we could use really whatsoever. So I just simply eliminated that. No reason to waste your time, my time, or anything else. Now, what's interesting here is many people are calling for this market to have a significant top that is coming in place out here. And what I can tell you is if we go take a look at what the 2007 top looked like and what the sentiment was by each of the AAII investors, what their survey came out with. Let me get my crosshairs out here. There we go. Here's where the readings were. You can see they're up towards the bulls here. At that stage of the game, they were very bullish, up around the 54. This, by the way, the dotted blue line out here. First, the bottom. The center blue line going across my screen, that's the average. So that's the average since 1987. The little dotted line out here happens to be one standard deviation of that. And the red line is one standard deviation to the upside. The red line is one standard deviation to the downside from the average out here. It's really the same thing that you're looking at on the bottom of my screen out here. So you can see that bullish sentiment was very strong back at the 2007 top. And with regard to the spread between the bulls and the bears, it was above or just right at that one standard deviation of the average of that. Now, this is a weekly chart, by the way, that you and I are looking at. Come on all the way over to the right-hand side to the lows back in 2009. And the lows back in 2009, you can see that the bulls here were down towards really some of the lowest levels that they had towards that one standard deviation, what I'm going to call a support line, for lack of any better term, but it was really right down to the bottom of that. And we can also see that the spread was way below one standard deviation at that stage. Market did what? Formed a pretty significant bottom. Let's go take a look at 2000. Let's just simply go see what is it that we can find out that took place at 2000 out here. So back in 2000, by the way, this is the S&P 500 that you and I are taking a look at. I don't have it as doctored up as I did in 2007. But what you'll notice at the high back in 2000 inside the S&P, which took place during the week of March 24th, 2000 out here, if you take a look again at the expectation of the bulls out here, you can see relatively high above their certainly their one standard deviation level out there. And the same thing with regard to the spread between the bulls and bears with regard to when the high was actually made out here. So now let's take that information. In fact, you and I can go take a look at other types of highs and lows that take place inside of the market. And right now I'm just focused on the highs. This has meaning as well if we take a look at lows. If we go take a look, oops, so that didn't work out real well. There we go. Now we take a look at where is it that we're at now. Remember, in 2000 and 2007, and quite frankly, elsewhere throughout this chart with regard to highs out here, and this, by the way, this does a really good job of identifying lows. We'll take a look at that in a moment. And if we take a look at where we're at as of last Thursday when the data was out here, take a look at the spread between bulls and bears out here. It's now, we haven't seen lows like this with regard to the spread since the April 2013 timeframe out here. Let me just squish this just a little bit more and pull this in. We had the April 2013 timeframe. We had a bottom that formed right back here in November of 2012 when the spread between bulls and bears were out there. If we take a look at the actual percentage of bulls that were bullish, right, with regard, you can that came all the way down back in April of 2013. Really right down to the level of where that bottom had formed back in March of 2009, that little one standard deviation line out there. So my point is this. There is data out here. You know, it's much like the commitment of traders data, you know, that was published a week ago that was talking about how hedge funds, you know, had gotten to the first time they had gotten a net short. And as if that should mean that gold was going to go ahead and move lower out there. An absolute reckless reading of the data, because what you got to do is really you should take this data, or I suggest that you would take this data and actually go apply it to a chart and say, screw all the noise in your opinion about what it is that you believe is going on inside the marketplace. And instead, why don't we go look for patterns out here that you and I can rely on in order to help us call. Because, look, I want to call that top as badly as you do, just like you want to be able to call that next bottom out here. Folks, I called that October low in 2014. How many folks were out there doing that? Come back into October of 2014 out here. Shoot, the sentiment indicator wasn't even that low. The spread between bulls and bears wasn't even that low. But I did call that as a significant bottom. It is a significant bottom. In January, I said the market would make a low in January, and it did. It actually took place in February. And you've heard me call other bottoms intra-day. You've heard me call them, during the time frame that we're in right now. Look, that's not as important as what is that indicator communicating to us as we speak right now? Is it positioned here for the market to actually make a major top? Now, the blue squiggly line going across my screen out here in the primary panel, that happens to be, because we're looking at a weekly chart, that's a 40-day exponential moving average line. So that equates to the 200-day daily. So it's a 40-week, and it's a 200-day exponential moving. We can see how that level has held as support. It was recently tested just a few weeks back during the week of July out here. So you can see these bottoms that form. We're more likely in a time period, when you take a look at the sentiment indicator, when you take a look at the spread, quite frankly, where bottoms form. And even I had to, when I looked at this today and went back and started to take a look at other bottoms that form, when we see these indicators down towards these levels here, and if you're following my screen, you're following my crosshair out here, I just was like, son of a gun, was really what I said out there. Could this information really be this useful? And the reality is, it is, as you take a look at it. Pretty cool to go ahead and use somebody's 6-month forecast out here. Take a look at how it applies to where the spread or where the bullish sentiment is and what typically takes place out here. You'll see here's some examples of some highs, some short-term highs back in March of 2012 out here. You can see that they were all up towards the upper boundary line. So that is, we can take it back even further out here. I think that the going back and taking a look at 2007, 2000, and then where we're at now, we'll see whether or not this was a good guideline for you and I as to what's going on inside of the markets out here. There's other things that you and I can take a look at, but right now what we should take a look at, since I've mentioned longer-term charts, since the month did end out here, let's go take a look and see what we've got going on inside of the Russell 2000. And inside of the Russell 2000, just to give you a feel for what it did, what it is doing, what it has been doing, we're taking a look at a monthly chart. That's what's on my screen out here. And you're going to see two colored lines, horizontal lines. You're going to see a red line. That red line out here, that happens to be the monthly horizontal trading range boundary line. The green lines are the weekly. You can see, like, you didn't need me to tell you this, I suppose, but since March, the month of March out here, since March, so for a few months out here, price has really been traveling, buoying its head between the support level of the monthly horizontal trading range, 1214.62 to be exact. As well, remember, the body of the candle is the essence of price. Forget about those extreme moments out there. And you can take a look at where resistance has been inside of the NQ. You can see how price had gotten up during the month of July, up into that 1264 area. It found resistance at this stage of the game. Expect support to be around 1214.60 inside of the Russell 2000. If we go take a look at the S&P 500 and we take a look at it, we're also going to populate this chart with its weekly and monthly profiles out here. As we take a look at those, what we can see here is that price is above both the weekly and the monthly. In fact, strong support inside the S&P 500 would be 2030.53. Any fall below that, it ought to find support at 1987. And not until you break that level inside the S&P 500 is there trouble in paradise. That trouble in paradise would likely be this candle session right here from October. You can see right at the top, that's October 2014. Right at the top of that is probably where price would find some support if, in fact, it were to pull back to those levels. But if we take a look at what the investor sentiment is, it's saying not so fast out there. And I'm not scratching my head, but maybe somebody else is. But go take a look at that data. You can do the work yourself if you want. You can download that data and just find a way to integrate it into your charting system out there. The data is available for you. If we go take a look at the NASDAQ composite on the longer term, let's go see what it has done, where it's finding resistance, and it's finding resistance at its weekly market profile. And that's at the 5130 level. You can see how we closed there last month, and we have tested that on, looks like, about 2 or 3 different occasions. Any move above 51.30 on a weekly basis, a closing, not a move above, but a close above 51.30. Price is going to run to the 53.97 level. That is its monthly profile out there. Let's go and take a look at the Dow just to round this out. That way we get a picture of what took place last month. Why did price stop where it did? And what are the hurdles? And if we take a look at the hurdles inside of the Dow out here, what we're going to find is up at that 18,239 level. That's really the level that the Dow has to catapult and get above in order for it to be able to get to higher price. If it can't do that and it's going to pull back, look at the 16,968 level. Again, this is a monthly chart that we're taking a look at, both with the weekly and horizontal trading range. And what they are, these horizontal trading range, these are just simply prices are going to move either sideways, diagonally up, or down. Right now, we're just simply looking at the horizontal levels between where price moves back and forth between out there. So that covers all 4 of the indices. What else do we want to take a look at? Well, let's go take a look at individuals. Let's look at currencies out here. Let's look at the euro, Japanese yen, off just slightly, coming back and testing the bottom of this little rising trend line out here. If it breaks through that, what we should see inside the euro, look, if you are in the short side of the camp, what you want to see is you want to go ahead and see this euro, Japanese yen take out the level where it's trading at right now. Then that says price ought to move back to about 135 and 2 pennies, maybe 134.27 out there. Remember, our markets move in correlation directionally to this currency pair more so than any other currency pair on the planet. If we go take a look at the euro versus the U.S. dollar, we're going to see that it has been struggling to just simply try to break above a descending trend line different than the channel line out here. We can see that price on Friday tried to move above that, simply failed to do so. We saw another test of that earlier in the day out here. What does that mean? Hey, if you can't break that trend, it says you come back and you test the low of that nice bullish engulfing that engulfed the July 20th lows out there at the 108 mark. That's what's going on inside of the euro versus the U.S. dollar index. If we go take a look at Goldilocks out here, gold on a daily basis. Key level now of support, in my opinion, is going to be the low of Friday. And that price point is 1079.20. If, in fact, that low gets taken out, meaning a close below that, well, you can expect to move down to an area of around 1070. That's your 1-to-1 A to B equals CD. But what could be on tap for us inside is a larger A to B equals CD to the downside. We'll come take a look at that if, in fact, those lows get taken out. With regard to light sweet crude, let's go see what it is doing. Down to $1.87, trade at 45.25 out here. Of course, what we are looking at right now is the September contract. This is trading at 45.23. To try to get an idea of where price might be headed to in this contract, we're just going to look at an expansion of swing points out here, and that's going to be the low from March 18th all the way to the high out here on May the 6th. You can see right now that what is in jeopardy from a support standpoint is 45.68. That's your 1.272 expansion of that set of swing points. You close below that today with any kind of conviction, you can expect $40 oil. $40.57 as it makes its way down to that Fibonacci expansion of 1.618. That's a beautiful thing. Dow's off 169, S&P down 13. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 156. S&P is down 11.5. I have a love letter that was looks like was just sent to me here, maybe about 15, 20 minutes ago. Says Steve, do you need a new job? I am 100% short the spies to go to 180. You've got to find a better job because why are you wrong? Why are you wrong? I have never seen a chart reader so wrong. Wow. Well, that's the whole thing about this beautiful market. We have to have buyers and sellers. We have to have people that take a look at buying opportunities and selling opportunities. The cool thing here about TFNN is that we get to be able to share with you not just our viewpoint or how we read the charts. We actually get to go ahead and provide you with the chart data. That way you can take a look at it too. And the answer is I may be wrong here, but I don't think that that individual knows what my positions are, for example, inside the newsletter. But let's just take a look at what's really going on inside the SPY. So let's go ahead and just take a look at the SPYs out here, because I want to be able to assist anyone. And right now, if we take a look at, first you start out with a monthly chart out here for the SPY. So let's not forget that coming off of the 2009 levels out here, the yellow line on my screen are nothing more than the rising price channel that is in place out here. In fact, if we take a look at the white diagonal line out there, for anybody long or short the market, it's very key to be paying attention to this. Now, this, you don't need to be a technical trader. No matter who it is that you are, what you can do is you can draw these lines in. These are important lines of support. In this case here, would be coming off of this significant low. That was a significant low candle-wise, everything else back in October of 2011. A little key reversal there. And if we take a look at that low, you can use as touch points the November 2012 low, the October 2014 low. So you see that nice little white arrow to the upside. In order for the market to have a chance of getting into that 180 level, and not that it can't, it's got to be able to break that trend. It has been unable to break that trend. Will it be able to break that trend this time around? I don't know. Is it too early? If you take a look at that cool chart with regard to the, and I want to thank those folks over at the AAII for their investor sentiment, because it actually does have a valuable use to you and I to understand what's going on inside the market. In order for the SPYs to be able to get down to 180, they've got to be able to break this trend line out here. And from a monthly standpoint or weekly standpoint, I've got the TAS market profiles out here. You've really got to be able to get back below the support, which inside the SPY is 198.27. Shoot, you haven't even broken through resistance, which is the weekly top of that box at 208.47 out there. That's going to be your first key level. Now, if we switch over to the daily chart and get a feel for what is going on here, and I would say if you're short, man, congratulations. You got to be loving a day like today. Do not forget about Turnaround Tuesday out here. What else do we have inside the SPY? We've got a market that's been moving sideways. It's nothing more than that at this stage of the game. In order for the SPYs to be able to get down to their next level of support, shoot, it's got to break a horizontal level of support out here. That horizontal level of support being nothing more than about the 204.12 area. And these are the lows coming back into March 26. They were tested that little hammer candle out there on July 7th. You need to see it close below that, and then price will go ahead and drop all the way down to the bottom of that support line. That's what's going on inside of the SPYs. That's on the daily basis. If we take a look at volume right now, of course, we are in the summertime, really winding things down. I guess, it depends on where you're at, if you're from the north or the south out there. 61 million shares so far today. What's that going into? Looks like that's going into 123 million shares to the upside from the trading day of July 28th, 105 million to the upside on the trading day of July 29th off of that bottom. Looks like it's pulling back the SPYs on light volume, but there's a couple hours to go in the trading session, folks. So thanks for that love note. I appreciate that very much. And there's always two sides of the trade. That's the beautiful thing here at TFNN. Stay tuned, folks. Our man David White is up next. I'll look forward to seeing you tomorrow afternoon. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.